Hey, welcome investors to the 40 Finance channel. Today we're going to be talking about Google stock. This is the one, at least here recently in 2022, you guys have sent the most questions about, the most requests to get my take on Google stock. And this is a stock here in 2022, despite firing on all cylinders, including a phenomenal earnings report on February 1st. It just seems to be stuck, sort of treading water. Obviously, we've had a lot of stock market volatility, but during that time, I would say that Google's outperformed expectations. So for this video today, we'll talk about some of the great momentum factors working in Google's favor and try to get a feel for what is holding this stock back from maybe breaking out to where many think it should go. Shout out today to our wonderful sponsor, Yahoo Finance Plus. If you've been watching my channel for a while, you know that I use this service all the time. And make sure you check out the special link in the description to get 40% off your first month of Yahoo Finance Plus. This is exclusive just for 40 Finance viewers. And on top of that, you also get a 14-day free trial before that month even begins. So an exciting offer and a great way to explore this wonderful platform. So like I mentioned a minute ago, Google has a number of momentum factors in their business right now, which I think bode extremely well both for the short term and the long term. In the short term, it seems like hopefully things are coming back online. Here in America, travel is picking up again. Hopefully our supply chain issues continue to be resolved. And what those two things right there do right off the bat is they bring in some of the big advertising dollars that had been sitting on the sideline. Travel advertising, automobile advertising, really anyone who's been stuck in the supply chain issues has been holding back a little bit on advertising dollars. So that simple influx right there is a boom for any business who works in advertising as Google does. Now in that same lane, we're also seeing a big boost to search advertising in the wake of the Apple iOS update. So Google's not necessarily immune from the Apple iOS update, but they do have some pretty savvy ways to work around it. And the number one way, perhaps, for advertisers is to play on search traffic. So instead of worrying about where you've tracked the user from, which websites they visit, etc., you can get to the crux of demand sometimes by just focusing on search keywords. And while it's speculation on my part that the iOS update has been a boon for search, we do know that Facebook has lost about $10 billion since the iOS update in advertising revenue because that's what they reported on their most recent earnings report. And even beyond the reattraction to search advertising, you of course have YouTube, which provides a whole nother way to dig into search and relevancy to run video ads for advertisers. So no surprise there, we continue to see strong YouTube growth and we continue to see new records for YouTube advertising. And the underhanded play, I think, with YouTube that gets overlooked a lot is not only just their mobile traffic, but the cord cutting and the streaming universe. At the end of the day, YouTube's a free platform. So if you're interested in going to all streaming, then it would almost be silly not to add YouTube to your streaming TV because of all the free content that it offers. Next on the momentum chain, we have the growth of Google Cloud, which has got about 10% of the market share for enterprise cloud operators. But the bigger thing for Google Cloud right now is it's transitioning from a loss leader, so to speak, where they're spending more money than they're making on it, and it's inching itself towards profitability, which obviously provides a great runway for future profits. Another often overlooked power play for Google is the Android mobile operating system. And while here in the USA, Apple does dominate about 60% to 40% over Android, if you break things out on a worldwide scale, Android is actually about 70% of the worldwide market. And Android starts to become really important in the out years because the growth of mobile in America will eventually work its way down to single digits. And it's really going to be the developing countries when you start thinking 10 years down the road where Google has the opportunity to generate a lot of revenue. And the last two things I'll mention from a momentum perspective for Google is one, the announcement of their stock split, 20-for-1 stock split. It does still have to be approved by the board. That comes up sometime in July. But what's important here is not necessarily that the shares or the value of the company changes at all. The big thing, in my opinion, is the options activity that could increase significantly with a split like this. I don't do a lot with options on this channel, but if you're familiar with it, you know that 100 share mark is really key in options world. And right now at $2,800 for a single share of Google stock, reaching 100 shares of that stock gets harder to do, particularly for retail traders. So generally speaking, I think the stock split is a big win for Google, and I think that the options activity, if it were to increase, could add even more momentum to the stock. And the last thing on this list is stock buybacks, in which Google has been a quiet repurchaser of their own shares, so we'll look at that in detail later in the video. Okay, so we talked about a lot of positives there for Google stock, and if you just listen to that soliloquy there, you might think, hey, this stock's probably rocketing to the moon. But if we look at the one-year chart here on Yahoo, you're 27.36 or so today. That price was actually available to investors, it looks like back, in and around July of 2021. So if you bought this stock for the first time, July of 2021, here you sit after all the accolades that I just said, you still sit about flat over, say, the past 7 or 8 months. And if you just eyeball these trailing 12-month statistics, everything sort of checks off in Google's favor. Your trailing PE for a company that's growing sits about 24 today. You've got an EPS way over $100 a share. And simply having an EPS in this current environment protects you from dropping too far in the market. And at a trailing PE of 24, you start to wonder how far could this stock possibly go down? It has to go up at some point. And in fact, if we look over at the Morningstar rating on Yahoo Finance Plus, we see a fair value of $3,600, economic moat of wide. So even Morningstar, that's relatively conservative when it comes to stock prices, they're saying there's, roughly $900 to be had here over the long term with Google. Now, before we jump into what might be limiting Google's stock price, I want to show you something cool here on Yahoo Finance, and that is you get access to these Morningstar reports. And anytime you have a big dog stock like Google or really any kind of S&P 500 type company, Morningstar is going to update their guidance several times a year. So you see on this one, they came out the day after Google's earnings report, which I believe was February 1st. And there's two ways to digest this information. You can obviously just download the full report, see if it pops up on my screen here. Yeah, so you can download the PDF full report and email it to yourself and read it at lunchtime or whatever you like to do. But I tend to take advantage of the summary information that Yahoo makes available to Finance Plus members. And this analyst note is usually where they give you the key information since their last update. And usually the thing I'm looking for is the synopsis on which way they see the stock going. So they have modeled lower margins in 2022 given Alphabet's continuing aggressive investment in cloud offerings. So like I said earlier, cloud services is kind of a loss leader right now. And every time Google invests in it, they shave a couple points off their profitability. We foresee a return of margin expansion in 2023 due to the steady increase in Google's cloud recurring revenue. We have not made significant changes to our model, and after considering the time value of money, we have increased our fair value estimate 4% to $3,600. Okay, and then it just calls out the stock split. So Morningstar, and you can go significantly deeper in this report. I think when I did that download, it was about 20 plus pages, and you can see all the different updates that they do, business strategy, economic moat. You can go on and on and on. But for the purpose of this video and in the interest of time, I just wanted to show you that Morningstar, when they do these updates, they talk about the rationale behind it, right? So they're seeing a little bit of margin compression in 2022 as Google sort of doubles down on their cloud offering. But then in the long run, they see that margin expansion returning back into 2023. And it's this call out about margin compression that I think is holding Google stock down right now. Okay, so if we go to the analysis tab here on Yahoo Finance, we get a feel for what the consensus estimate is from analysts right now. When you have a big stock like Google, you have a lot of analysts, which is really great news in terms of utilizing averages. Now, I personally like to focus on fiscal years because it makes it a lot easier to kind of make like a reasonable price projection for certain times of the year. And right now, Google's coming in, let's just call it $116 is the projected EPS for 2022. Now, this is what the stock's forward PE is going to be based on. And there's nothing wrong with the $116, but it's interesting that last year, they came in at $112 at the end of the year. So this number of 115 is only 3 or 4% above last year. So if your earnings per share only go up 3 or 4%, then that kind of limits how much upside you can have in the short term. Now, what's interesting is if we start to look ahead to 2023, then just like Morningstar said, that margin compression, most analysts are expecting that to expand. So instead of only going up 3 or 4% here in 2022, if you can hang around for 2023, like all long-term investors should, that number expands to, roughly 15% or so on the EPS side. Okay, now on the revenue side, this is another place where you're going to have a little bit of stalled momentum. So when we look at our revenue estimates for 2022, if you're coming in at $304 billion, that's plus 18% from last year, which was $257 billion. The problem is, and a lot of companies face this problem, the percentage of growth is down significantly from the year before, where Google grew revenues 40%. But if you're just looking at fundamentals, obviously this 18% stands out as down significantly rate of growth over what they did just last year. Then even looking farther ahead, you take another couple slivers off of the 2023 projection, at least where it stands today, drops to 15%. All right, so where do I think Google will land from here? Well, the first thing, if you've watched my videos, you know I like to go back into these annual valuation measures on Yahoo. And if we go back to pre-COVID times, and we kind of target this maybe 2016 through 2019, actually I'm on trailing, I want to focus on forward here. So you've got a range, call it 21 through 25 or so on the forward PE. That's been the valuation range that Google has been seeing prior to the pandemic. So for purposes of this video, I'm just going to settle in at 24, and that is actually slightly higher than what Yahoo is reporting right now. Now, going back to the analysis tab here, I can tell you that I personally think that Google outperforms this 116 number. If you just go through their earnings history, down here, they've got this surprise percentage, and they show you, how has Google outperformed or underperformed. And Q4 of last year is probably the most realistic projection we have in today's world of people getting out and about. And then looking down here on the consensus trend for EPS, 90 days ago, this number was at 112, and they've already added, give or take, 350 to it. So we can already see how analysts are revising the 115.89. And then looking ahead to next year, the original of 127 90 days ago. Well, heck, that's already up $8 to 135. So for me, I'm going to go ahead and say this 115. I'm just going to add 15% to the number because I think as the year goes on, that's a pretty attainable goal for Google. All right, so where do my numbers come in as far as the projected price for Google? You know, for this one, I'm going to target post Q2 earnings, so roughly August 1st. Last year, Google reported in Q2 on July 30th, so we'll just say August 1st for fun. I'm going to say that EPS projection rises all the way from 115.89. I say by that point, it's at 133, which is plus 15% of where we are today. In terms of the forward price to earnings, you know, I'm sticking pretty close to today's number of 24. The range is 21 to 26, but I feel good at 24. So if we take 133 times 24, that gives me a price projection for August of 31.92. Guys, for Google, that's plus 16% from today's 27.34. So all in all, I would say Google is a pretty good investment right now. And as a matter of fact, I'll go on the record and say it's a solid buy range, anywhere between $2,500 and $3,000. I think puts you in a fantastic spot to make a couple bucks and be net positive by the close of the year of 2022. And that's just the short-term forecast, right? So if we think about how you probably should hold a stock like this for 5+ years, then obviously the opportunity is much larger than that. All right, guys, so that's my Google forecast here for the short term in 2022. I say by August 1st, this stock gets very close to $3,200, if not more. And if I was thinking about buying Google stock right now, I'd say that even in today's price, it's a pretty safe range to start dabbling in your investment. Of course, with the volatile market like we're seeing now, I think it only makes sense across any stock you buy to just kind of pepper in and sort of DCA anywhere between 2,500 and 3,000. You never know when the next inflation headline or interest rate hike will have a temporary setback in the market. So save some cash in case you see an outstanding sale on Google stock or any stock like it. All right, shout out again to our special sponsor today, Yahoo Finance Plus. Don't forget to go in the description, take advantage of that free trial offer, not to mention 40% off your first month of Yahoo Finance Plus. Phenomenal service. And as always, please give the video a like, share with your friends. We'll see you on the next one.